Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Friday the 23rd of December and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 68, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Now, this is the last show of the year, and we've kept the best to last, with used car sales playing such a pivotal role more than ever in 2022 for car dealers. We thought we'd sign off the year with a Xmas Used Car Special, with Phil and I in conversation with three special guests, our very own three wise men.
So our guests this week have all had a unique perspective on used car performance and trends in 2022, and they'll be sharing their views on how the market might look going into the January and Q1 of 2023. So sharing his views from the wholesale world is Andy Condy, who's the General Manager of Auctioneers at Cox Automotive. Welcome, Andy.
Thank you very much. Thanks, Phil.
We'll have an online marketplace perspective from Phil Jones, Chief Operating Officer at eBay Motors Group. Good morning, Phil.
Hi, team. How you doing?
And sharing his take on the independent retailer sector is David Billsborough, owner of Cheshire Cars. So welcome to all of three of you. Welcome, David.
Thank you, guys. Good to be back. And what a seasonal show this should be, shouldn't it?
Need some jingle bells, don't
looking forward to this. Looking forward to it.
And no one's responded to me advertising you as a three wise men.
No, we're just waiting to see who might do that first.
Yeah, okay.
Better than the Stooges that we've used before.
Yeah.
So
Oh, yes.
we'll stick with the wise men. Keep it festive.
I just want to know which one's the donkey.
Oh, dear.
We'll tell you at the end, Andy. We'll tell you at the end. We'll see how it goes. See who makes the most mistakes.
Yes, yeah. Okay, look, to get things started, let's look at retail and wholesale prices. We know from our monthly podcast chats with Darren Martin from Cap HPI that trade values are on what he described as a gentle downward trajectory, which is a phrase we really liked on the podcast. And that's, of course, after hitting those dizzy highs of 2021 and 2022, while retail prices have remained remarkably stable this year. So maybe starting with you, Andy, what's your take on the wholesale trends at the moment in terms of prices, and maybe some thoughts on how they'll possibly look going into the new year?
Yeah, I think if we look at where we are now, for the first time this year, we've seen a bit of seasonality in the marketplace that we would normally expect in the pre-COVID years of a normal December. I think the big change is that in the past, some of the big car supermarkets have been out there buying, and they haven't been really this year. They closed the checkbooks very early, almost obviously to the benefit of people like David in the independent world. But the big boys really closed the checkbooks the end of November. But I think through the year we've seen some really strong performances, and we look at what was said about a slow seasonal trajectory downwards, but I think we need to look deeper into that, because there's certainly some marques out there that are still making really strong money. And I think we're going to be governed again by the supply of new product when it comes to the purchasing of late year low mileage product. But what never fails to amaze me is those older cars that have been well looked after, that are still making absolute fortunes. And interestingly, a lot of the big wholesalers, whether it be dealers or supermarkets, have had to buy older stock, have had to buy poorer grade stock, and are prepared to give really strong money. And I think as we go into the first quarter of next year, I can't see that really change. I think there'll be again a lack of numbers within the marketplace, and some very strong demand.
Some interesting points there, Andy. I mean, we'll talk about electrics separately as one of the other questions we've got, but particularly interested in what you're saying about some marques performing strongly. Are there any you can talk about, and also segments? Any segments that are performing particularly well at the moment?
I think when you look at that small that smaller car that are going to be that's going to be sort of economical, I think fuel has played a big part. The fuel pricing. I know that we've seen some of that dropping, but that smaller end of the market,
Yeah.
the demand for that, particularly things like the PSA's product and some of the Ford product and some of those really nice, albeit the Fiesta we're going to be saying goodbye to pretty shortly, but that sort of product is still really, really sought after. And when I do those sales, and also I think marks like Volvo have come back really strong. And I think if you look at that sort of market, but it's that demand and where that niche market is going to be really, really competitive. I think even there's been a band almost of you can sell anything up to about £15,000 in the auctions. It's that 15 to almost £25,000 market that has been tougher. But then you've got that prestige market above that there seems to be in a really strong demand for. And when you look at the economy in general, you'd think that really wouldn't come into force, but it certainly has been. And some of those really nice cars. But again, I keep telling all our vendors, presentation is key. David and I often speak about this. Presentation is key. Service history is an absolute key. The amount of times that we sell vehicles for, main agents and the big distributors, have you got a V5? Well, no, we haven't got it. Now, they must have it, but they don't send it to auction. And that makes such a difference to when somebody wants to buy a car. Have they got everything that goes with it? So I think they're the sort of the areas that need to be looked at and have made a really big difference.
Some interesting points there, Andy, and I'm just wondering how this filters through to the retail side of things. So maybe same question for you, Phil. We've talked about this gentle downward trajectory on the trade side. What are you seeing from a sort of marketplace perspective?
Yeah, it's been a really weird year, though. You can't really say that anymore because that seems sort of be the norm. But one of the things we're starting to see, and I hate to be sort of the kind of Scrooge at Christmas, but you can really see the cost of living crisis start to play through. So yes, we've seen car prices sort of stabilize, but that's a mixed bag because frankly, I'd say the stabilization is in the older cars. It's the younger cars that are driving the price increase. But we can see the eyeballs going to cheaper cars. We can see eyeballs going to older cars. We did some research recently where sort of 30% of people are looking to delay their next purchase because of the recession, because of energy bills, and most of the time we change our car because we have to. There's a need, and people are just because they haven't got the money, they're having to look at older cars. And actually sort of have this mismatch. So it's interesting what Andy said about the supermarkets coming away a little bit earlier, because I think they're caught in this area where they've been making good money, but in order to sell extra volume, you have to go into older cars, and with older cars brings the risk. But they're playing in that mass market, and people simply haven't got the money that they had before. So the sell is a different one. Really, and so people need to be sort of tactically astute.
And do you see that stability that you mentioned going into certainly January and maybe Q1?
Yes, I think so. I mean, we see no sort of flood of supply coming back into the market. I think we'd all take stability at the moment.
Yeah,
But
yeah.
a year ago, our office was still closed because of COVID, and Ukraine hadn't been invaded. So a year is a very long time. So we do, barring any kind of major changes, but I do see the pressure continue to get harder with people potentially delaying purchases. It may open up avenues of opportunity in finance, in warranty, and the such like. But people are going to be sort of tiptoeing through the first quarter of next year, I think.
And David, what are you seeing on the ground? I mean, you are talking to buyers on a daily basis. How are prices performing in that end of the market?
So the market for us is being buoyant all year really, and the fight has been getting hold of the right mix of stock as always. We've managed to do that. I'm glad Andy's explained why. Maybe I thought it was one of the reasons, but we have managed to procure some cars in the last sort of 4 or 5 weeks, which would ring true with what Andy's saying there. But prices are still cap plus, so £500 to £1,000. We're not seeing a lot of prices making north of £2,000 into cap anymore at the moment, anyway. But likewise, there isn't. We'll be trying to buy cars next year that were never even manufactured. So I think there'll be a pressure on prices come February. I think they'll start to ramp up and then carry on through March, April, May, maybe soften in the summer. But so the challenge is still buying the right mix of cars and the colours and the specifications. And if you can then add value by changing something about the vehicle. So, for example, a body styling kit or some new front grills or some decals or something that we've always done in the years, but we're just getting more and more refined with doing it now, aren't we? With the body styling kits on the Audis and the Mercedes and the BMWs, and that's turning cars around quicker. So an average M Sport, maybe say 35 days with a body kit, maybe 15, 20 days. So that's good for the people that have spotted that. And as you guys know, we do quite a lot with the Bath, the little 595s. So we've had great success with those in the last 2 years, which is good because not many people seem to understand them. So we've done really well in the last 2 years with those. So it's niche areas and sectors that are going to do well next year, and we'll continue to try and get as many of those vehicles as we can possibly get.
And in terms of prices and those conversations you're having with buyers, have you got a feel for how the cost of living crisis and rising energy bills, inflation is impacting on their buying power?
I think it's too early to say at the moment. Obviously, Phil's mentioned there that they're seeing 30% of people delaying a purchase, which is not good news, is it? But people will still need. I take the view people still need to have a vehicle. It's not an optional thing anymore. A vehicle, and one of the ways that they can enjoy what is a difficult period is to have a new vehicle with nice specs. So we'll be doing everything we can to make sure that in the coming first quarter of next year, we offer those cars at the competitive pricing with a reason to buy them. Really, we're very much either online or you can come and see us at the dealership, as you know. So
Yes.
we've championed delivery for 12 years. The YouTube channel this year reached over 1 million views. So we believe we're doing the right things to attract interest. It's just whether we can get the vehicles through the door and obviously add our preparation, because Andy's touched on preparation is absolutely key. It never ceases to amaze me when I'm looking at other dealers' forecourts, some shocking quality of images, and what really are dirty inside of the steering wheels, the gear selectors are all dirty and stained, and I think that's rather sad, really, because it doesn't do any of us any good. So they still aren't. Some dealers are not putting much store by the preparation, by the valeting and detailing, and that means that people like myself and other good independents and there's some good franchise dealers as well, obviously, are going to benefit from that. So it's just hard work. It's more hard work for next year, and you've got to love doing it, haven't you? You really have. And I think if you love it, the passion's there, the love comes through, and people like to deal with us. Yeah, well, I'm optimistic, but not as optimistic as I was maybe 6 months ago. So we'll just have to try and dig in and work that bit harder and smarter.
And I mean, sticking with dealer stock, and we've talked about some of that weakness and strength and shortage of supply, but for dealers listening to the podcast this morning, I mean, not everything is moving as quickly as the others. We've talked obviously around the impact of the cost of fuel. We'll talk shortly about EVs in particular and specifically on what's happening in the EV sector, because I know everyone will have a view on the EV sector. But in terms of turning to yourself first, Andy, and then yourself, Phil, from a a consumer perspective. But what is moving fast and what is moving slow? We saw the extension of the convertibles that had a lot of strength later on in the year, out of seasonality. We saw pressure on that sort of high-end, heavy SUV product that felt a bit of pain. I mean, all of this, all the weakness is coming from a high point in terms of where values have achieved. But what is moving quickly and what isn't quite, not on the dealer's radar at the minute for buying?
I think those big engine, SUVs, the big 4 litre petrol vehicles are going to be hard work. They are hard work. But I think you've also got to remember that over the past probably 2.5 years, we haven't really had a really tough winter. And what usually happens when you have those, we've seen in the past that the cost of those big 4-wheel drives going up considerably, week on week. So we've not, and a lot of the dealers then can take that short, albeit a relatively short window, to get rid of a lot of that stock, and they haven't been able to. So consequently, there's a lot of older, 7, 8, up to 10-year-old, big high mileage, big engine SUVs about, which are going to be tough. But it is those little small economical cars that really look good. And just one thing that I think we need to bear in mind as well when we're talking about the trends is that there's a big lack of confidence in public transport out there, and therefore people are still going to want to buy cars. But also, I think people working from home, and those people that haven't gone back. There's many millions that haven't really gone back. I think we'll give families the opportunity to cut back to one car, and I think those two things should be taken into consideration next year, because I think we will see the impact of that. But for me, just going back to your question, Phil, I think that it's. And again, this year we had that really hot summer that we saw those little convertibles. Somebody fancying a little, whether it be an MX-5 or a little BMW or an Audi convertible, prepared to have a bit of fun and buy something. And I think so. It's very seasonal, but it's those smaller vehicles that are going to be economical to run, which will continue to get really sort of high prices.
And Phil, does that reflect? I mean, you do the market report from eBay each month, which we do cover on the podcast. But is there any sort of trends that that you're seeing within that report, or what you're seeing yourself in terms of those faster moving vehicles, the ones that if you get on your forecourt, it's the right thing, it's not going to stay, are actually these might be a little bit more tougher than you might expect in previous years?
There's kind of another number of ways to look at it. Like, one, as an industry as a whole, like days to sell is actually relatively flat now. And it's sort of stayed flat since we kind of went into that kind of COVID era when actually everyone got really lean and there was high demand. So I think it's really interesting that the industry has been very adept at keeping the right stock mix. I know that's partly been driven by the fact there hasn't been enough cars, but the days to sell is still lower than it was pre-COVID. So, the types of cars that were the fastest selling on our site, it's a mixture. It's the small cars. You've got the Up, but then you've got, Galaxy, Mocha, Outlander, 3 Series. The different edge I would put on it is that we can see a shift towards the older stock. Again, that's partly because that there are more older cars, but also this is price point starting to flow in. Diesel has probably performed worst out of all of those, but still, it's still much better than it was kind of in 2019 when it's all pre-COVID. So there's relative stability, and I think just everyone being quite tactical.
Yeah, you think they're just sort of being sort of firm on, because we've experienced positive margins throughout the year, haven't we? I mean, we know there's a great deal of stock. We know although consumer demand and confidence has been challenged, but margins have been healthy, and cars have, they've as you say, the days to sell has kind of seen a bit of a leveling out, but it's not extended it significantly, has it? I mean,
yeah, I think David sort of summarised it right. That people still need cars and they still need to change cars, and we're not selling that many more cars, and actually we're selling fewer cars than it was sort of pre-COVID times. So still not back to normal. as it were. So we're sort of trading at that kind of essential level. But people are just being smart. And I think the tragedy for the industry is, they're making good PPU, but there just aren't enough cars to amplify that. That's better than kind of some of the alternatives.
Now, one of the most talked about trends of this year has been this accelerated rollout of new EVs, with EVs accounting for 15% of all new car registrations in the year to date. So I'm just wondering how that's manifesting itself in the used car sector. So maybe start with you, David. Look at what's happening on the retail side. What's your view on things like pricing and demand so far for EVs, and what proportion of EVs are you seeing in terms of what you're selling as a business?
Yeah, good question. So we have sold electric vehicles and hybrids as well. But my thoughts at the moment are these vehicles are predominantly going to the larger operators with showrooms, main road sites, etc., displaying the vehicles, as opposed to maybe niche operators like myself that we don't have that main road display. So that's the prices have certainly been high, and when we've managed to secure them, we've been quite happy with them, and they have found a buyer. But I think in the last month, 5-6 weeks, prices have softened on EV, especially Tesla. So I think there's still a long way to go with electric vehicles. It certainly appears to be out of reach of a lot of people, and it's almost a niche market within the market.
Yeah.
And I think that will be possibly continue to be the case for the next 12 months, 18 months, 2 years. I think if everyone is agreed that it's the way forward, then obviously as they go forward with it, the technology becomes more understandable, more available, better manufacturing processes, etc. Because, if you look at a bar, for example, that they've just launched in the last few weeks, that car's £40,000 new.
Yeah.
So it's a heck of a price hike from a petrol Abarth. And for most people, they would like to try it, I'm sure, but at 40,000 cost of living, is it practical? So I think there's a lot to be done, and it won't go away. I think most manufacturers have got something, are offering an electric equivalent, aren't they? So it does seem to be it's accepted that it will be the sort of way to go for the future. But I don't know if it's the way to go right now, and certainly I would argue it's not the way to go for some people because the infrastructure's not there by any means. So we're buying them, but we're not actively thinking at the moment it's the right time to go and jump in with 2 feet and just
Yeah, some interesting points there, David. So the ones that you are stocking, are you having awkward, difficult conversations with customers because you can't bring those prices down as much as to reach that sort of sweet spot that they would like to pay? So
yeah.
are those conversations difficult?
Well, they just obviously it's a sort of the old-fashioned way of dealing, isn't it? How much can you knock me off that car?
Yeah.
And when you explain it's the market value for the car, given its age, mileage, and specification, and that's where the conversation ends. And we lose that potential sale. But I would argue, was there ever a sale there? Because some people like the new technology, but then they can't always afford the new technology, or are unwilling to pay for the new technology. So my take on it is that at the moment, buyers of EVs are paying heavily high values for the R&D in the vehicle. The manufacturers need to get the R&Ds back, the research and development of the vehicle, and I think that is one reason possibly why prices are, quite a big premium. And there's quite a few still questionables, isn't there, around battery life and battery performance?
Yes.
And then of course battery and the safety, because there's been one or two catching fire, sadly. So there's still a long way to go. I don't think we should. We're not dismissing EV. It's growing, isn't it? But it's not going to suddenly become the default alternative. It's not going to be it. I don't see it being the car quite as soon as people had hoped for. So until prices come down, MG are one of the cheaper ones, I think, aren't they? MG
They are.
range.
Yep.
So those guys probably are closer than most. Teslas are still north of 50,000 new. And like I just said, the new Abarth is basically £40,000 for a limited range, you know.
Yeah, a lot of money for a small car. Yeah, yeah. And Phil, same question for you. We know that EV volumes remain low in the used car sector, but they are growing. So, what are you seeing from a marketplace perspective, and possibly some of the consumer research that you've done?
Yeah, so we're definitely seeing kind of more EVs drip onto the site. So they used to be about 2.5% of the listings, and now about 4% of the listings. So there's definitely more coming to market, but it's still relatively small as that niche, as David was saying. But what's really interesting from our consumer insight is that this time last year we're reporting that 22% of people were hoping to buy an EV as their next car, which is up from 12% in 2020, which is a big old leap. Doing the same research this year, it's still 22%. So
Yeah,
it's relatively flat. But what has changed is that people have gone from being anxious around the infrastructure and access to charging points to being anxious about the cost, not only of the headline costs, because they are expensive, but actually then the ongoing cost of running. We've taken out some of the tax incentives, and and electricity is more expensive, and it's not it's not as advantageous as it was. So. Which I think is a shame, because I think as a society we've kind of got a responsibility to try and reduce kind of our carbon footprint and such like. But it does show that I think the market needs a helping hand if that really is the ambition to get us there, both in terms of infrastructure and subsidies and the such like, to push it over into the critical mass. As ever, people's wallet is dictating what they can and can't buy.
yeah, exactly. And Andy, really same question for you, but from the wholesale perspective, what trends are you seeing in terms of EV pricing and demand?
Well, I think David's given every reason why we're struggling to sell EVs in auction, to be honest. And I'll give you a little bit of an example. 4 months ago in September, we had I won't say which vehicle it was, but we had a launch of a new electric vehicle, and one of the main dealers bought, I think he bought 20 vehicles, of electric vehicles in that sale. He's only sold two, and the prices of what he paid for 20 are now several £1,000s less than what he gave from then. And I think that's in a short space of time. So I think there's an awful lot of work to be done. I think the best way to describe the market on EVs is that I think the market is very skeptical. I think the people there's a lot of doubts. Infrastructure definitely, battery life definitely, and I think there needs to be a resurgence in some form of confidence. We've seen some of the big supermarkets dipping their toes into the EVs, but really with very little commitment, because I think they've probably realised that these are going to be a struggle. I think we've got a long way to go before we need to be where the government and those people who are pushing the EV market want us to get to, and I think we've got a lot of work to do, and I think that's reflected in both wholesale and the auction markets.
And just a quick follow up on that, Andy. Are you actually seeing more EVs coming through
No,
the
no, we're
auction?
not.
You're not. No.
We're not. Certain manufacturers, few from Renault, things like that, but very few. And I do know that I think there's quite a few of the commercials, few light commercials, particularly, they're coming back in that, and probably more so in that market than in cars. But we're having we've got the occasion. There's quite a lot of hybrids coming back, but full electric, very few.
Yeah, and I think just finally on that before we move on to the next question, I think there's the point of it is a period of volatility. We've seen that acceleration through the last sort of 2 years, particularly of the shift to EV, because sometimes those were the only vehicles available because of the parts issue and everything
Yeah,
else. But they're now starting to return, and there's a lot more to be done, around that used market and that cost of ownership of an EV in the used space, because they are coming. they will start coming in significant volumes, and they will enter that space. But there's still, as you say, they've got to stabilise, haven't they? And I think we've seen a lot of volatility and instability in terms of that at the minute that we'll see. So yeah, it's going to be an interesting one, but they're certainly coming, as we well know. But thinking more about the economy now, so officially, I think with the view is that we are in a recession now. We've had periods of high inflation. The view is that it's obviously starting to stabilise, and it's maybe under better control than it could have been previously. We've got the cost of living crisis that we've been talking about, the energy crisis that we've touched on. But turning to yourself first, Phil, in terms of that consumer marketplace, how is consumer confidence, and what's your view on that at the minute, and in terms of all this that's going on in terms of that consumer at the minute?
Yes, it's definitely declining again. Yeah, not wanting to kind of bring everyone down at a Christmas show, but people are talking about delaying their purchase. 30%, are worried about recession, energy bills causing them to delay. More often than not, they're thinking about going for an older car, as I say, just because that's simply where the affordability is. But to sort of try and turn it on its head and kind of turn that frown upside down. The pockets of opportunity we see is that consumers do expect that the next car will cost more. So 45% of consumers do expect that they'll need to spend more. They don't want to. That also opens up people to considering finance. We've seen this on our site. We've seen a kind of increase in referrals to finance companies. So 2/3 of consumers are interested in finance because it's about affordability. People need to have the car, and they're feeling less flush, and maybe kind of finance is a way of de-risking that. And another thing that our research has shown is that people do not want to sacrifice or kind of give up a warranty or the protection that you get through that when buying a car. And I think those are little nuggets that dealers can lean into, because more than ever, consumers will need a bit of a helping hand to find the right car for them and their circumstances. And those are the times you kind of see the smarter dealers win out, I think.
Yeah, like you say, where there's challenges, there's opportunities in there in terms of people still need cars, and I think that's the key point with a lot of this is that next year, people will still need to swap the car. They're coming to end of contract. They need it for doing the work. Andy Conde, you at the start sort of talked about that public transport challenge that we're all experiencing just in the recent weeks. People still need cars, so it's going to be interesting. And I mean, David, from yourself, I mean, we were talking just before we started to record that you're busy right up until Christmas Eve. You've got challenges around the rail network, because I know you spend a lot of time going collecting cars and dropping off cars and using the rail network. What are your customers saying to you at the minute around things like inflation, interest rates, and that consumer confidence? Are they still as upbeat as they've always been, or is there some challenges there now?
So yes, I think the people that get in touch through email or by personally visiting us, they're pretty optimistic. They're coming after doing research. As Phil will know, people research online and are more ready to buy than ever before, which is fantastic. It cuts down the time taken for them to sort of walk around, drive around forecourts. They do that with a mouse on a screen, don't they, or an iPad. So when they come to us, they pretty much know what they want, and if that car meets their requirements in terms of condition-wise, because they've already seen the colours, the specs, and mileages, etc. We've presented them the finance application online, etc. So they've already had probably a soft quote. So they're ready to buy, and if you've got everything right at that point, they're pretty much buying. Some years ago, there would be a lot more discussion that you were asking about there, Phil. Yeah. And there's a lot less discussion these days. Is the car still available? Yes, it is. Well, when can I have it? Well, you can have it tomorrow. Okay, how does that work? And that's the sort of discussions that are taking place. We're not obviously December is a quieter time for normal anyway. So we're certainly having a quieter time on inquiries. But we've got previous customers who wanting to swap cars that they bought 2 and 3 years ago. So we're constantly looking for cars to suit their needs. So we've a couple, 3 people that want to do that. But actual fresh inquiries, they are very quiet. They're thin on the ground at the moment. Some of my colleagues some are doing quite well, having a decent December, and others are like me, just having a sort of almost no inquiries. So how much of that is down to cost of living? It's too early to say. I think. I don't think we should dismiss it. We should obviously ensure everything's working. Your emails are correct, are coming through to you, etc. Your live chats are ready to go, working. So dealers can and should test their offerings to make sure that each one of those offerings of contact into the dealership is working as it should do. And obviously, most people now are offering some form of delivery, aren't they? So, which is obviously what people want. Some people were prepared to do business completely online, and other people were prepared to do some of it online, but still want to come in and drive the car, don't they? So I think it's a little bit early to say. Maybe if we meet again in 2 or 3 months' time, it will be clearer. I mean, I'm remaining optimistic. I've got to remain optimistic, otherwise there's no point in being in business. But there is a recession here. It's here now. I heard recently it could last until the end of 24. So how deep it will be and how wide it will be, there's a lot of conjecture, isn't there? So what we're going to do is just offer the best possible service and solutions to people's motoring needs. That's what we're going to do. So we're going to carry on with that, and hopefully that will stand us in good stead.
So, final quick-fire question to you all. What do you see as some of the key challenges and opportunities facing dealers in 2023? And if we could start with you on that one, Phil.
Yes, I was trying to think of something that we don't know that could happen next year, but
Yes.
the world continues to surprise us.
Well,
Yeah.
the Bank of England, the Bank of
So
England ONS are quite far
so
out.
Yeah, that's a dangerous game.
I think to continue the trend, like the economy isn't going to amazingly just kind of rapidly fix itself. So I think that again the opportunity is those dealers who are smart, as David's sort of talking about there, focus on the basics, focus on doing things really, really well. And, whilst digital plays a huge part, I'm a big advocate of that, obviously, in terms of all the research. I'm also really passionate that actually the dealer has a job to do by going a bit further with the consumer to make sure that they kind of qualify what car they need, what their circumstances are, and actually kind of provide a bit of the old-fashioned sell. Rather than just kind of the order taking, which I think is a kind of a novel idea. But I think those who are operationally kind of astute and centered around customers will win. So I think that's the key thing my key bit of a sort of analog advice for next year.
Yeah, well, there's nothing wrong with analog. I'm a great believer in going back to mono. Challenges and opportunities. So what do you see, David?
I think the challenge will be stock. I think that won't change. I think there's we all agree that stock will be tight, maybe even tighter, because we were buying 19 registered cars this year, and next year we'll be trying to buy 20 registered cars, which were obviously not produced. So I think stock will be the challenge. The opportunities is being able to get the car when you get it and present it in the best possible way and afford the buyer the best possible experience, all-round experience. And that's what we'll be continuing to do. And very much looking forward to the challenges ahead. And dare I say it, trying to improve on this year. I think we're going to, sort of be optimistic and say we're going to be able to lift the number of units we buy, which will hopefully result in more sales, and if more sales come, hopefully should result in a better, higher bottom line. So that's what we're going to be doing in 23.
Well, the podcast has taken on a very optimistic note. So over to you, Andy. Challenges and opportunities facing dealers next year?
Well, I think going for what David just said, the challenge is definitely, and again for us, is going to be number of units. but it obviously gives an opportunity as well because it's going to keep prices strong. And I think from my point of view, when we're dealing with vendors, we have an awful lot of what I call non-car related vendors now, and a lot of them are sort of finance related, where they're finance companies and they don't really understand. So I always have a bit of a what I call a pre-match chat with our vendors, and I think it's getting them to understand and helping them to understand the market and explain to them why they should be taking bids on cars and maybe they should ask for a little bit more. So for me, I think it's twofold. Number one, I am optimistic. I'm like David. I think we will be fine. There'll be a lack of supply. There'll be a continued increase in demand. I'm not sure about the slow trajectory in prices. I think, as Phil has said a number of times, I think those older cars will certainly be much sought after. And I think those people that have got a bit of a snob value about them will be going out and buying private plates and putting private plates on older cars. So Mrs. Jones next door doesn't realise.
Have you got one?
I have got a private plate. But
have you got an old car?
No, I haven't got an old car. I haven't got an old car. But so I think that looking ahead, I think that people will always, as you guys know, I drive up and down the motorways. We'll all need cars. We've got to get from A to B. We can't rely on public transport, and therefore that's why I think that people will still want to buy cars. Maybe not as many, and there won't be as many about. But for me, I think it's there's no reason to be pessimistic about the market. I think we've all got to be optimistic in what we're doing and carry on enjoying it, and of course, putting smiles on faces and pounds in pockets, David.
Absolutely.
I think but just to sort of round up there, then I think clearly there remains much uncertainty. I think seasonality is kind of out the window now for the foreseeable. I think if we, as we touched on before, if the ONS and the Bank of England can't get their forecast in line with each other, then what chances has anybody else? I think what the three of you have obviously clearly summed up. We've been through many challenges within the automotive sector over the decades. We've been a resilient sector. We will get through this. If you just look at the last 3 years of the challenges we've faced, yes, there will be challenges, but to Phil's point, there'll be opportunities as well. It sounds like, David, you need to be buying some private plates. Business opportunity
absolutely,
there.
Absolutely.
Get some private plates stocked up. But clearly, we are heading into a challenging period, but comes challenges is like I say, some opportunities there. Stock is clearly going to remain in short supply. That will help keep values fairly stable. Yes, EV is some challenges remain in that EV sector, remain definitely in the used EV sector, but again, it'll stabilise, it'll find its position. Dealers will get confidence around what they invest in, what they don't invest in. Consumers will get more and more education around, that EV sector. So as consumers get more confidence, dealers get more confident, then we'll be in a really clear space. So I think it's great that we're finishing on a high. I think, we're definitely a resilient sector and fantastic chatting to all three of you. And I'm glad the IT worked today as well, even better.
Can I just wish you all a very Merry Christmas and a very good New Year. It's been my delight to come on the shows in the last 18 months or so. I really look forward to it. And it's always very positive. And I think also all the listeners, your listeners, I wish them all a very good Christmas and a Happy New Year.
Well, thank you very much for that, David. And unfortunately, that is all for now. So many thanks to our guests, Phil Jones, Andy Condy, and David Billsborough. And many thanks to all of you for listening to and supporting the podcast in 2022. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chat that matters. We're back again in early January with season 9. Until then, it's a happy Christmas from me.
And a Happy New Year from him.